Hi everyone, good morning. Thank you for joining us today on the last day of STACS Showcase 2021. We hope you've enjoyed this celebratory and collaborative FinTech event happening during the week of Singapore FinTech Festival and the series of live panels and showcases we've brought to you this week, together with global financial and tech leaders. I'm Grace, Marketing Manager at STACS. For our Kopi chat today, I'm absolutely honored to be joined by Ray Ferguson, Chairman of STACS and Aviva Singlife Holdings, who brings with him many years of experience in the financial industry, as we will get to hear from him firsthand his experiences and valuable insights. Ray is a renowned international banker, business leader, and advisor. He has an extensive executive career in banking across 5 continents in multiple chairman, board, chief executive, and business leadership roles with Standard Chartered Bank and Bank ABC. Ray was also named a Distinguished Fellow for Corporate Banking by the Institute for Banking and Finance. Without further ado, let me now pass the time over to Ray to give a brief introduction of yourself.
Hey Grace, thank you, and to all of you audience out there, I hope you're having a great week. It's Friday, and yeah, just by way of introduction, I think you have done a perfect introduction, Grace. Thank you for that. I do chair STACS, which we'll touch on in a moment, as well as Aviva Singlife. I also chair a commodities platform called Hevia Connect, and I'm a chairman of an asset management company also based here in Singapore. Looking forward to having a Kopi chat, Grace. I don't know what you've got in store, but it's been a big week here in Singapore. I can't believe the number of sessions, the topics, the breadth of topics, from crypto to central bank digital currencies, DeFi, blockchain, Web 3.0, sustainability, embedded finance. It's all been covered. So you can take this conversation around wherever you want to take it this morning, and we'll hopefully have an engaging time.
Thank you, Ray. And thank you once again for joining us this morning. All right, so let me begin with my first question. So Ray, last year we heard the great news regarding the merger of Aviva Singapore and Singlife Holdings to form Aviva Singlife. Can you share with us some key milestones that Aviva Singlife has achieved since then?
Yeah, sure. Yeah, it's just coming up a year since we've sort of completed the transaction, whereby effectively a new vehicle that was put together by Singlife acquired Aviva in Singapore, and along with the existing Singlife and the Aviva in Singapore, we've been putting these two companies together into one integrated entity, fusing together not just the technology and the systems and stuff as you'd expect, but really taking a hard look at how the whole way that products, customers are built, the way the brand is managed, and trying to bring together what was one of Singapore's really, I guess, first mover as a digital player in the shape of Singlife, coming together with a fairly traditional player with a lot of 1.5 million customers in Singapore, and a large advisor force. How we bring these two together and create something quite different. So what's happened over the last year is we've built a new tech roadmap that is now in the course of getting implemented to serve us over the next several years. On the 1st of January, we will unify the brand. So the brand will become Singlife, and the Aviva brand will gradually reduce. There'll be certain things that we will have still with Aviva around, but essentially we're unifying that. And we've, as I think many of you know, the two companies come from a very different heritage, and what we're really going to create here as we go forward is an organization that is about digital, and digital is the first touch point. Everybody's got a mobile, and we need to get everything into that device, everything. Yeah, but alone it's not enough. And people want connection. They want connection. They want a human touch. They want advice from a human. They want advice from somebody they trust. So digital, I guess, is the foundation and a requirement of every industry going forward. But I think at Aviva Singlife, what we are really working on is how to future forward how digital and face-to-face, particularly involving advisors, how that works in a very different sort of way. And that's all sort of exciting stuff that we'll be bringing around very shortly.
That's amazing. Congratulations. Yeah, I really like the point that you brought about future forward, about future proofing. So the global COVID-19 pandemic has tested the resilience of financial institutions and corporates alike. Can you share with us how technology has supported Aviva Singlife's rapid growth throughout the years, and especially in recent unprecedented times?
Yeah, I'll give you a couple of examples of it, and it links back to COVID, I think. If you go back to April 2020, we can all remember when on April the 6th, if you were in Singapore, and similar dates all around the world, we just got sent home. Everybody was at home. We were scared. The systems, basic, in a big insurance company, basic things like claims and whatnot, there was processes to continue making them. And to paying things and dealing with some customer service stuff. But virtually everybody that was involved in a front-end role, like as an advisor, was at home. And they didn't necessarily have the tools, the processes, the compliance clearance, the digital forms, all of that stuff to carry on their business virtually. But over the next couple of months, both inside Aviva and inside Singlife, was a little bit further ahead than that. But I think what that pandemic shut down for that 6 or 8 weeks, it was quite sort of strict. It pushed organizations, not just the one we're talking about, but many organizations to very rapidly not just get basic digitalization so that people could sign bills and stuff, but actually build platforms that could be used for a lot of face-to-face sales and advisory activity, and all the back-end fulfillment that kind of goes from payments to form filling, and DocuSign became the norm and so forth. Now that was happening, but if we had not had that, it would not have happened to the degree it's happened at all. And I think that has allowed a lot of financial, and that's followed across the board by many other people, but across the world, it's taken sort of what might have taken years and it got done in a few months, freeing up the development agenda, the management bandwidth to think about how do you now innovate, having that, having these tools in place with your advisor base, with your customer base, with basically almost taking paper out of the equation, which is what happened. And paper is largely out of the equation in can be out of the equation in most businesses now, and you can move to a much more automated, almost no operations in the old sense way of working. So I think that was I think a big thing. I think the other thing that during that period, during that first shutdown, we launched something called the Singlife account. It's a card-based product that offered a fairly attractive return on balances, and it was linked to a life insurance construct. And over that summer, we brought in over $1 billion of new AUM, and we were entrusted by people to take that on. But I think was partially helped by people were at home. They were attracted to their mobile. They were attracted to rather than being sitting in the office piled in paper, they were able to respond easier to digital advertising, and I think we were able to manufacture some great media and some great awards and digital experiencing out of that. So 2 examples where I think COVID has had, not COVID itself, but the requirement suddenly to work digitally has had a massive and positive impact in this industry.
Truly remarkable. Yeah, it's really fascinating to hear about all the technology that Aviva Singlife has employed to support its rapid growth and to future-proof it, and also fight through this COVID-19 pandemic. Yeah. Speaking about technology, let's narrow down the scope a little and dive into DLT. DLT, also known as Digital distributed ledger technology has progressed a fair bit from the initial cryptocurrency type. Starting in the mid-2010s, financial institutions have started to dabble and explore with multiple different use cases, and recently we have seen these implementations scaling up with pilots and live deployments in the financial industry. So Ray, what's your take on the future of digital securities and tokenization, and how do you see this evolving the financial industry in, say, the next 3 years?
Yeah, before I answer the direct point on digital securities and the fractionalization, if you like, I think it's just worthwhile commenting a little bit on DLT itself. Yeah, because I think, and I'm not saying this because I'm the chairman of STACS, and I'll give you an example why. Because STACS clearly is an institutional DLT significant player in this space. But DLT has now become mainstream for mainstream FIs. And mainstream FIs that historically would have built their own stuff, kept it in-house, are now turning outside and being finally prepared to share, to work on a pan-industry basis, and to use a DLT where the final source of truth is in that independent platform as a very valid way of doing business, which their regulators in financial services are now okay with. Yeah, and I think that move on, and I said I would give you an example, and I don't want to go back to Singlife particularly, but I can give you an example there. Singlife has a business in the Philippines. It's a business that has hundreds of thousands of customers, and it has a business that only has one technology platform that's built on blockchain. It's built on DLT. That is what that business runs on. It's a regulated insurance company, and we have pioneered with using that sort of technology to in that particular market because of the unique, well, the size and the scalability. And on certain days, we issue 100,000 policies. That would not be possible without, if you were going to go back to the old clunky days of a whole set of connected, big frame platforms and so on. Yeah. To go and answer the actual question you asked, because I think that framing is important, because if you don't have, like a lot of financial services, when you run a financial services player, part of it's about your customer offer, part of it's about raising capital and managing liquidity and operations and keeping everybody's data safe and all the things that we do. But a big part of it, particularly at board level and chief executive level, is keeping the trust and respect of the regulators, because that nothing else happens if you don't have that. And I think we have seen, and you see all through this week's presentations in the SFF, that our regulator here in Singapore is very progressive in this space, as are regulators all around the world now, publicly acknowledging, publicly setting up processes that are going to go on to DLT environments, including, as we've seen here in Singapore with the ESG registry, which the MAS is working in partnership with STACS on. Huge endorsement by the regulatory community. That validates it for the financial system and the financial players. And these financial players can now, and comes back to the point, start to then provide product that comes out of the ability you get from that single source of trust DLT environments that they can API into, and then bring that capability and the functionality back to their own front ends and out to their customers. Yeah? And I think it's if we were here 2 years ago, we wouldn't talk as confidently that we're past the pivot point, and DLT is not about pure play crypto at all anymore. And of course, at the heart of what we're doing in STACS and all of the work that we're doing with our clients is the opposite of that. Is about institutional and institutional efficiency, which leads these institutions. They don't do it just for their own efficiency. They do it to then provide a more flexible front end delivery to clients.
Certainly. Yeah, I think what you said earlier about gaining the trust of the regulatory bodies really resonates with me. And Earlier this week, we are very excited and we're very proud to officially announce that STACS is building the Project Greenprint ESG Registry, an industry-wide DLT-based platform in partnership with the MAS. So actually, I think that leads us on to our second part of our discussion perfectly. So focusing on green fintech, Singapore has been looking to leverage its position as one of the world's most developed fintech markets to become a leader in green fintech. And MAS is taking the lead for this with Project Greenprint. So Ray, my question to you, in your opinion, what are some of the things that need to happen urgently for Singapore to truly solidify our position as a leader in green fintech and achieve sustainability?
Yeah, look, I think you're highlighting that Singapore and its fintech community and its regulator is prioritizing sustainability. I think it is even bigger than that. I think there is a recognition from the very top and on a unified basis in Singapore that this is not just about an opportunity for our financial sector. It is also because we are very vulnerable to climate change itself, given where we are, given the level we sit at in sea level terms, given the propensity for much more severe weather impacts that will directly affect us. So I think it is beyond doubt that particularly on that climate change access and the issues that are well debated in Scotland this week, that this is a sort of number one priority, and that is now dropping down into the financial system, and we're seeing it in multiple ways. We're seeing initiatives from the central bank here in just before the FinTech Festival to launch an initiative, even to just get the terminology and the way the taxonomies work to actually see what we're actually talking about, not just for Singapore, but across, and trying to lead global initiative on that. We have seen countless examples, not just for the FinTech Festival, but over the last 2 years or so, where both and the STACS have been part of that. The Monetary Authority has actively, been pushing developments all the way back to the Project Ubin and others to try and use distributed ledger technology, number one, but also then over the recent while to put a sustainability piece on top of that. And as I say, to have STACS selected by MAS under its Greenprint piece to provide that independent source of final truth on a whole group of emerging ESG data is a tremendous responsibility on us. As we look to take that forward and look at the wider piece here, I think again these signals that have come, I think on a consistent basis in terms of the regulatory side, that has allowed some other very big name institutions like Citi, like UOB, like OCBC to come and want to again be collaborators and partners in the very early stages of putting our own ESG registry together. Yeah. So look, I think it's all about a journey. It's something that always these journeys have some urgency created by the leadership. Yeah. Our sovereign wealth fund here, Temasek, has made it very clear in its mission now that sustainability is central to the investment thesis going down the line. The central bank is making it, a clear message that even just through the small example of Greenprint is how important this is.
Thank you, Ray. Yeah, I think say even last year, green fintech was very much a fad. I think this is also similar to what you mentioned earlier. DLT was a fad earlier on, really focused on crypto, but it has really evolved. And I think today, organizations are quickly seeing that it's no longer a good to have, but a must have in terms of future-proofing and building resilience in the long run. But at the same time, even though we are seeing this mindset change, and action being taken by financial institutions and corporates. And all these are very heartening. We are also seeing many statistics out there. Like, for example, the UN estimates that an annual US $2.5 trillion investment gap must be closed to deliver the Sustainable Development Goals, also known as the Green Finance Gap. And this is just one of the many statistics out there from reports that, but overall the main gist is that firstly, climate change is irrefutable and it's happening rapidly right now. And secondly, we are still leaps away from truly achieving sustainability, and collective and urgent actions need to be taken today, right now. So my question to you, Ray, what do you think is the role of technology, specifically green fintech, and how do you think it can come into play to accelerate our industry's race to achieve net zero?
So again, we used a framing. If we were here last year, it would have looked like this. This year, it looks like that. I think we have had this this FinTech week at the same time as the COP26 as a backdrop. And if anything, I don't know how COP26 is going to turn out. There's another day or two to go before we really figure it out. But what if anything is really obvious coming out of this is that we are in a rush. We are in a much more serious, time compressed situation than I think many of us would probably have spoken about a year ago. And I think thanks to a lot of different very unfortunate climatic events that are occurring with such regularity. We're getting reminded of this every day. So what does that mean for green fintech? What does that mean for the financial sector? And what does it mean selfishly for DLT, given we're in that business? I think the one thing about putting together DLT platforms that is very different for the financial industry's history is it's about a shared plate. It's about putting something in that everybody can still have their anonymity, can still have their own security and the protection of their own data, customer information they're responsible for. But we don't have to go and build all of this stuff themselves. You can share the plate, you can have one plate. You can build, therefore, new innovative ways of information flowing around that underpins the wiring of the financial sector to really understand where its money is going, where investors' money is going. Is it going into green? Is it going into greenwashing? Is it going into partly green? Is it going into real things that do good, or is it not, etc.? And I think just bringing using the DLT model of decentralized but trusted and immutable and single source of truth, if you like, I think things can move much faster, and this needs to move fast. The rewiring of finance needs to move much faster. We can't move at what we would describe as the old bank speed, because everybody can't go and build their own stuff. It's going to take too long to get it all to integrate. And I think to be genuinely observable by an increasingly important piece is coming from a regulatory angle. Yeah, and I think ongoing banks, financial services players, insurance companies, their customers are going to demand that they can show beyond any doubt that they are playing the game in the right direction, even if it's still doing some legacy stuff and all of that these gaps are closing, and that the money and the shift is going into the green and the sustainable economy. Because the more that money shifts, then the quicker adoption happens, the cheaper things become, and the more that we can accelerate and close that gap, which is just I think we're all realizing it's looking very difficult.
Certainly, yep. On that note, actually, Ray, what is your aspiration for the financial industry next year?
Well, I think I kind of touched on it a little bit there. I think that the financial industry is going to have, whether it comes from COP or not, it's going to have some additional responsibility ladled onto it with increasing degree of seriousness, both coming on one hand from the providers of capital, which ultimately are the general public and people who invest in things that anyways up with capital and ends up in an insurance company, and insurance company chooses how to invest it. I think that the change that boards of financial services companies will have to make in the next 3 years will be more than they've made in the last 15 in this space. So back again, I can just talk to one example because I happen to chair that board with Aviva Singlife. We have 5 pillars that our board is. We have 5 pillars to our strategy, in terms of how we develop our business, and one of those pillars is about sustainability and how that fits with all of the other things, the other 4 sort of pieces that we do. That hasn't been in place for 5 years, hasn't been in place for 10 years. That is there now. And that is there because most of us as directors, we don't want to sit on the board of a company that didn't have it right in the central plate. Yeah, it's not initiative number 9. This afternoon, I'm going to a session with my whole board, whereas all we're going to talk about is that pillar and what we're doing about it and what we think going forward that'll mean for how we develop products, how we develop and manage our own balance sheet with our own money and our customers' money, and how we invest it in quite a lot of depth. Yeah, so I think it's the pivot point on a lot of things. They kind of come, and then when it actually happens, you kind of know it's happened. And I think the pivot point from the financial system on green we've passed it. It's getting reinforced significantly. I think the pivot point on distributed shared plate, APIs that allow me to go and bring embedded finance capabilities from all sorts of different places and give it out to my end users without them even knowing what goes on in the back end, I think is just going to create so much activity and so much, I guess, new functionality and build. I think what's most important. We mentioned trust with the regulators, but when you run a financial services business, at the end of the day, it's trust from your customers, your policyholders, your investors, and trust is a small word with 5 letters, and there's a lot in that. But I think I think as I've just sort of been summarising here, I think we are at a big pivot, and I don't think finance is going to be the same.
Perfect, Ray. I think that this really sums up our chat today perfectly. Thank you really for sharing your valued experiences and insights with us today. At this point, I just want to open the floor for any questions. If anyone in this session has any questions, please feel free to input in the Q&A tab on the right. Okay, while we wait for questions coming in, Ray, I actually have one for you. So earlier this week, I attended one of the panel sessions happening during STACS Showcase with speakers from Northern Trust and CSOP Asset Management. And I think a very interesting point that was brought up was the idea of having technology solutions really suit the specific needs of customers. So the idea of almost like a customized solution. But at the same time, we also understand, that an industry-wide platform is kind of the solution and the way to go to resolve fragmentation within the industry, which is a very prevalent issue and has been ongoing for the past 50 years. And this notion of an industry-wide platform is also aligned with the direction that regulatory bodies like the MAS are heading towards. So from your experience, how do you think a balance can be struck between an industry-wide platform as opposed to a more customized solution?
Yeah, I think at the end of the day, the push and the pull on this is that for 50 years or 100 years, everybody built their own stuff, largely automated what was previously on paper. And what was previous systems and ways of settlement, ways of doing payments that were done on paper and telexes then became you know, slightly, the old process just got sort of modernized a bit. But I go back to this notion of embedded finance, where I can provide almost any service customizable to exactly what you want. Great. If I have an algorithm that's choosing the right partners, the right APIs, the right way of bringing all that information together, and then my front end, I own you as a customer, is able to put that back to you, and even within that, you have a customizable palette, if you like, of how you want to see and feel and whatnot about all aspects of financial affairs. Is what that's what's going. That the winners are going to build those things. Yeah, I think the point about industry, you know, industry not working with each other, and it isn't quite true. I mean, there are big industry utilities such as SWIFT that underpin the moving around of a lot of things that are owned by industry players. There's a lot of in the consumer space that Visa and Master do that is if you like a shared utility. I think there's going to be much more development in that space. You take things like security. Every company has got its own protocol, its own chief security. You know, I'm talking about cyber. Yeah, everybody's got their own way of doing it, their own manuals, their own strategy, their own. And then the government, if you take an island like Singapore, where again we've got vulnerability, the government's got its own piece. You know, why is some of that not more shared? Yeah, why is there not more of a utility that? Because it's not really all that competitive. We just have to stop the stuff getting stolen, yeah, and not have anybody threatening institutions or the country as a result. So, but I think that the tools for better cooperation, if you like, in the centre are there, and I think, and they're not necessarily, DLT is not necessarily all that new, but again, it's now able to be used, as are a number of, and the way the APIs, which is not a new thing per se in a tech sense, but combined with, you know, with the mobile being the real enabler of all of this at the end user side, that's what's meaning that this is a very different and exciting place to be.
Thanks, Ray. Thanks for sharing from your experience on this point. Yeah, I think it really resonates, and yeah, the idea of how it should be interoperable with devices. So at STACS as well, our platform and solutions are actually interoperable. So clients and partners can connect their existing infrastructure swiftly and easily to enjoy the benefits of our solutions seamlessly and immediately. So I think the point about how even if it's an industry-wide platform, the key here is that it needs to be interoperable with existing infrastructure because, like you mentioned earlier as well, financial institutions should not need to overhaul their entire infrastructure to enjoy the benefits of technology.
Yeah.
Okay, I don't see any questions coming in. So I think everyone's being, oh, okay, wait. We have one question coming in. So, Ray, what obstacles do you foresee with the new Web 3.0, and how do you think it will affect the play on sustainability?
Well, I think all that I kind of covered in that second half here was really could be labelled under Web 3.0. Again, Web 3.0 didn't just sort of show up on the 1st of January and become something. Yeah, this is a accumulation of obviously the whole static web that we started with back in the early 90s, and then the more interactive type of Web 2.0 that's been around for the last decade or so. So I think I mean to the panelists, to the person's question particularly. I think Web 2.0 is what Web 3.0 is, if you like, the freeing up of this is mine, you go to my institution for this, you go there for that. Yeah, it's that it comes back to that more shared play, more there's still individual manufacturing a product, but the whole distribution side and how it comes back again into that palette and what I see as an individual, and because everybody is an individual, yeah. I think that yeah, how does it sit with sustainability? I think the point that continue to bring out is that sustainability requires disclosure, requires people to understand some really in-depth things way down ecosystems. In the commodities business, we need to understand where rubber comes and which tree it comes from, and we're all the way from a tree all the way to, let's say, a tire in a car in North America, and that requires a lot of data, and it requires a lot of layers of trust. And I think that's why it's not the new invention of just having DLT. It's at the same time as you bring all of these other technologies, and you bring an element of AI over the top, which again is getting smarter, and computer processing power is faster. But the fundamental reason this is all happening is that people either have this kind of mobile in the hand, very, very powerful smart computer, they have a tablet, or they're sitting behind a screen that just mirrors the same thing, yeah. And now it's no longer that different to operate. You can work off an iPad and do your entire life off that. It's hard to work off a phone, but yeah, but my iPad is just really replicated all around me on as many screens as I have here in my office now. And I think that's what's really brought it together. Cheap, easily accessible, bandwidth that is unlimited, which in the parts of the world is still an issue. But certainly sitting here in Singapore and this virtual sort of world that we're able to live in, and you bring all that together, some smart re-engineering of probably some technologies that have been around for a while that on their own couldn't do this. You add in, the trust and the regulatory side that I've touched on, and we're in a new world, and we call it Web 3.0. We could call it embedded finance. We could call it a number of other pieces, but it is a journey. It's not that suddenly we've sort of got Web 3 companies and you've got Web 2. I think there's this transition, but companies that are not building their architecture for the sort of world we talk about, they're going to die. Yeah, and there's a lot of doer, boring companies that are going to die because they just haven't got their act together fast enough, and they're going to get eaten by somebody else. That again happens on a very gradual basis, but there are countless examples in many, many industries.
Yeah, certainly. I think future-proofing is necessary, and they need to start right now. I think this is a point that we've talked about we've gone through a couple of times here in this discussion, and I really like your point about collaboration. So with the regulatory bodies as well as with other technologies. So, DLT itself, it's good, but not enough. So at STACS, we also collaborate with our partners to integrate IoT and data analytics as well.
Which is very important in that, particularly if you're looking at green tracking, who's really telling us what and how honest are they about what they're really doing. And honest is not the right word, but you need to have, there is no point in us channeling investments into something we think is something, but it's not. And I think that's where the use of those sort of IoT devices, again, I see that across the commodity space. You see it in the vehicles space. There's just a lot that can be quite quickly, very cheaply gathered, that can then be packaged in a way that means something. This stuff existed before, but now it means something. It can be illustrated and visualized and presented in a way that has meaning and can guide investments and decisions.
Thank you, Ray. All right. I think in the interest of time, we are quickly coming to the end of our discussion today. So before we officially end today's session, I just want to pass this remaining time to Ray to share with us any parting words of advice or hope that you'd like to leave the audience with.
No, thank you. Well, first of all, thank you, Grace, for the opportunity and for the questions, and also more importantly to the audience who are taking time out to come to our STACS showcase and to contribute and to learn from that. I think that there's a big thank you from me wearing a STACS hat. Just wearing a hat as a Kopi chat with you, Grace. I think there is a big pivot. It's happening. We're moving. It's about speed, and success will come. This is no longer about if not when type sort of discussions. We have to move to a very fundamentally different world in terms of our approach to the environment. And I think every financial institution, very difficult that they're not going to be part of that. And therefore they need solutions, they need ways of moving faster, as I say. And I think that's what I love about what we're doing at STACS is to see how we're bringing an enabler to allow people to move faster, to solve something that's fundamentally the biggest issue on this earth today.
Thank you once again, Ray. It's really great to have that opportunity today to understand your perspective and learn from your experience. Right. To the audience, thank you for joining us at STACS Showcase this week. Wrapping up the event at 2 p.m. later, catch us for a celebration for Women in FinTech, featuring an esteemed speaker panel with distinguished female leaders in the space. If you've missed any of the earlier sessions this week, including ESG FinTech on day 1 and 2, Asset and Wealth Management on day 3, and Digital Securities on day 4, you can always catch a replay of all sessions on the platform, which will be available for the next month. Thank you so much again, Ray, and thank you everyone for joining us today.
Thank you, everybody, and thank you, Grace, for that. Thank you.
Stay safe. Thank you.